This video is for informational purposes only and does not constitute financial advice. Always consult with a professional before making any financial decisions. I'm sure you've heard the news. Don't forget to subscribe, like, and share. President Trump's recent tariff announcements have sent shockwaves through global markets. Investors are reacting with fear and uncertainty. The Dow Jones Industrial Average plummeted over 1,000 points in futures trading. This follows a brutal week where the S&P 500 experienced its worst two-day performance since March 2020. The tech-heavy Nasdaq entered bear market territory. Asian markets also tumbled. Japan's Nikkei 225 index plunged 6%. Hong Kong's Hang Seng index saw an even steeper decline of 9%. These sharp drops reflect the global reach of Trump's trade war. Adding to the turmoil, even cryptocurrencies like Bitcoin were not spared. Bitcoin, often seen as a safe haven asset, fell 5.6% as investors sought liquidity amidst the market panic. The lack of reassurance from the Trump administration over the weekend only fueled the sell-off. The market's reaction is a clear sign of the anxiety surrounding Trump's trade policies. Investors are bracing for a protracted trade war that could damage global economic growth. Financial analysts expressed deep concern over the market turmoil. Mark Arbiter of Arbiter Investments described the stock crash as the worst two-day performance for major indexes since March 2020. He noted that 90% of S&P 500 stocks fell, a clear sign of panic. Julian Emanuel of Evercore ISI characterized Trump's actions as a radical shift in economic policy. He warned that the trade war is causing widespread uncertainty and increasing market volatility. Evercore ISI even lowered its 2025 year-end S&P price target from 6,800 to 5,600 due to the heightened risks. James Demert of Main Street Research echoed these concerns. He expressed worry about the lack of clarity on tariff implications. He believes this uncertainty could lead to slower economic growth or even a recession. The prevailing sentiment among analysts is one of caution. They see Trump's trade policies as a major threat to market stability and global economic growth. The recent market decline is reminiscent of past market crashes. Bespoke Investment Group highlighted the rarity of the two-day 10% decline in the S&P 500. Since 1952, this has only happened 3 times: October 1987, Black Monday; November 2008, financial crisis; and March 2020, COVID-19 pandemic. These historical precedents offer both hope and caution. While markets have historically bounced back from such steep drops, the recovery can be slow and painful. The largest next-day drop following a similar decline was during the 2008 financial crisis, underscoring the potential for further losses. The current situation is unique in that it is driven by political factors, rather than underlying economic weaknesses. This makes it difficult to predict how long the turmoil will last and how deep the market correction will be. This is not financial advice. The future of the markets hinges on the outcome of the trade war. If Trump continues to escalate tariffs, the market is likely to remain volatile. A full-blown trade war could trigger a global recession, leading to further market declines. However, if Trump reaches a trade agreement with China and other trading partners, the market could rebound quickly. Investors are eager for any signs of progress in trade negotiations. The Trump administration has downplayed recession fears, claiming that dozens of countries are seeking better trade deals. However, until there is concrete evidence of progress, the market is likely to remain on edge. The coming weeks and months will be critical for the markets. Investors will be closely watching for any developments on the trade front. Until then, buckle up for continued volatility. Don't forget to subscribe, like, and share.